Good morning and welcome to Stock Market Today. That's right. New name for the show, same great content. Today is Monday, October 8th, 2018. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at DanRusso_CMT. And if you're on Stock Twits, I'm on there as well under the same handle. And Stock Market Today brought to you today and every day going forward by Chaikin Analytics in conjunction with StockCharts.com. and Stock Charts TV. So, tough day for the S&P 500 on Friday in the markets in general. Trading lower with the S&P 500 at one point dropping below its 50-day moving average before lifting into the close. Technology and communication services were the worst performers, while the bond proxies and energies led. Treasuries were weaker, with the curve steepening. 10-year yield hit 7-year highs at 3.23%. The dollar was weaker against the major crosses, and gold finished up 30 basis points. WTI crude was little changed on the day. Again, the outperformers, utilities, REITs, and energy led. Underperformers, tech, communication services, materials, as well as consumer discretionary. And as we arrive at the desk this morning, futures are pointing to a lower open, down 20 basis points after the index suffered its first back-to-back weekly decline since late June. Asian markets under pressure this morning, with China the standout, down over 3.5% after they returned from their week-long holiday. European markets are weaker as well. Treasuries are closed today for the Columbus Day holiday. Dollar is a bit firmer against the euro and sterling, but it's down against the risk-sensitive yen cross. Gold off by 70 basis points, and WTI crude is off by nearly 1%. So as we look at the levels for the S&P 500, you can see here we pulled down and tested that key support level at 2873. If we had it on here, that would also show you the rising 50-day moving average. As I said, we lifted into the afternoon on Friday into the close, but we are down here this morning. So support comes into play at 2873. Then below that, 2800 and 2763 is your rising 200-day moving average. Resistance, 2920 to 2940 zone. The RSI remains in bullish ranges despite the pullback, but Chaikin money flow has turned bearish with the recent pullback in stocks. We'll see if we can see a little bit of a stabilization there. So the way we're shaping up the market here is we remain with a bullish view, but we are a bit more cautious because we think that if this 2873 level breaks, it opens the door for a move down to 2800. Hasn't broken yet. We are keeping a close eye, and we want to remain nimble out there. Your key points every day in your email. I'll give you the 5 bullet points that I'm talking about in my note to Chaikin Analytics members. And as we said, S&P 500 test support at 2873. 10-year yield continues to advance. As I said, though, the Treasury market is closed today. Commodities rally on oil strength. The dollar rallies towards the August highs. And futures do point to a lower open. And as we look at the power bars for the major market indices, we can see just, there was deterioration across the board on Friday. The Dow down 72 basis points, now 13 bullish or very bullish stocks for 2 bearish or very bearish stocks. S&P 500 declined 56 basis points on Friday. 105 bullish or very bullish stocks, 72 bearish or very bearish stocks. NASDAQ really bore the brunt of the selling as the growth and momentum stocks came under pressure. 21 bulls to 13 bears for the NASDAQ. There's that small cap out underperformance, down 90 basis points, and continued deterioration in the power bar ratio. Bonds down, yields up. Utilities, despite the rise in yields, utilities had a strong day, up 1.5%. 13 bullish or very bullish stocks for 1 bearish or very bearish stocks in the utilities sector. And what's interesting to me is that the defensive properties of utilities seem to be outweighing in investors' minds the fact that utilities are, in fact, inversely correlated to the direction of the 10-year yield. So that's an interesting development that we'll keep an eye on going forward. According to the Chaikin Power Bar, small cap stocks are more bearish than large cap stocks, and the major indexes are mixed. Stock of the day today. Every day will generate a potential idea for you, and an idea that we think is interesting based on our proprietary power gauge rating. And today's stock is Danaher. Comes to us from the conglomerates industry group, which is strong. Closed at 106.98 yesterday, down on Friday, rather, down only 2 basis points, so outperformance. And the Chaikin Power Gauge rating for Danaher is very bullish due to very strong earnings performance and attractive financial metrics, as well as positive expert activity. And as we take a look at the chart here, we can see the ribbon at the bottom of the screen tells us where the power gauge rating has been for the past 12 months and where it is currently. And you can see we are on that very bullish rating. And just recently, the stock began to outperform relative to the S&P 500 or the SPY. So the dynamic duo is in gear. The market and the model are in agreement. Stock is oversold with mostly bullish money flow, testing the rising long-term trend line. Last 4 earnings reports have been positive surprises. So Danaher is a name that does look compelling here on the pullback. I do have support at $104. You can see it here. It was tested 1, 2, 3, 4, 5 times. So it's decent support at $104. I like Danaher on the long side. Our stock of the day today at Chaikin Analytics. Looking at the sector tracker mover over the last 5 days. Energy outperforming as oil climbs, breaks through the $74 level for the commodity. Utilities, again, as I said, the defensive structure of utilities bucking the fact that they are inversely correlated to yields, but the rising rates are helping the financials. Financials up 1.6% over the past 5 days. Industrials rounds out the group of 4 stocks that are positive over the last 5 days. On the downside, consumer discretionary has come under pressure. Real estate is actually getting hit as rates increase. Comms and tech round out the bottom 4. And our industry in focus today is the oil and gas exploration and production services group. 22 bullish or very bullish stocks for 6 bearish or very bearish stocks. And over the past 6 months, the oil and gas E&P subsector has outperformed the S&P 500 by 5.3%. And that power bar ratio, which measures future potential, is very strong with more bullish than bearish stocks. Group is currently ranked number 3 of the 21 subsectors that we look at, and it's moved up 5 slots over the past week. Some of the interesting names there: Gulfport Energy, GPOR, Marathon Petroleum, ticker symbol MPC, and Southwestern Energy, ticker symbol SWN, all have very bullish Chaikin Power Gauge ratings, and we'll take a closer look at one of them here today. Here's Marathon Petroleum, very bullish stock, strong trend, strong industry group. This is a name that we've been bullish on for a while. As anybody's ever heard Mark Chaikin speak recently, this is a name that he calls out regularly, and we can see why, right? Very bullish stock, strong trend, strong industry. Here's that very bullish rating according to the ribbon at the bottom of our chart. Stock's been mildly outperforming since the July timeframe. But what's interesting to me here is that while we're not oversold, the last 2 troughs in our overbought, oversold indicator were actually at higher levels. So, this is something we call a positive divergence, and it's happening despite the fact that money flow has turned bearish here. This is something to keep an eye on. However, for the past few months, it's been persistently bullish. Stock is above the rising long-term trend line and support here in the $80 to $82 zone. So I do think that Marathon is compelling here on the long side, but bearing in mind that if we did break below that $80 level, you might want to reevaluate the long position. But Marathon Petroleum, ticker symbol MPC, does look interesting to me as a long idea. Taking a look at what's trending, Friday's S&P 500 gainers and losers. GE up 4% as they recently announced a change in CEO, and investors are starting to wrap their heads around what that could mean for the company. I will call out the fact that the stock was upgraded here today. TSN up 2.5%. Neutrally rated stock. No real news driving that. In fact, no real news driving the rise in the rest of the stocks on the left side of the board here. FE, neutrally rated stock, up 2.25%. Clorox, also neutrally rated, up 2%. Did actually trigger a buy signal in Chaikin Analytics today. And then ticker symbol DTE is a very bullish stock, which was up over 2% on Friday. On the loser side of the board, IPG Photonics, neutral stock, down nearly 14% as they lowered their guidance. Newell down 5.75%, hitting 52-week lows. Eastman caught a downgrade, sends that stock down more than 5.5%. Costco EPS missed down over 5.5%, and Dish down over 5.5% as well, or nearly 5.5%. Very bullish stock. No real news driving that. It might make sense to take a look at that one as the media industry group has been strong of late. Moving on now, 10-year yield really was the big story late last week, and especially on Friday. And you can see here's the TNX, the CBOE 10-year U.S. Treasury yield breaking out of this consolidation that's marked trading for the majority of 2018. Took out those May highs at 3.1 to close close to 3.23% on Friday. Yields are above the rising 50-day moving average. They are above the rising 200-day moving average. And if you've been listening to this show for a while, if you're a Chaikin Analytics client, you read my notes, you know we have been in the higher rates camp for some time. However, we don't view that as a negative for the equity market in general until they get closer to 5%, especially if the rise in rates is a function of a stronger economy. What we're really looking for, though, is for that rise to be gradual. I think what caught investors off guard late last week was how fast the rates popped and moved higher. If the rates are rising gradually, the equity market can withstand it until we get to about 5%, but it's that rapid pop in the rates that really kind of caught investors off guard, in my opinion. You can see here the RSI for the 10-year yield is in the process of shifting to bullish ranges, actually got overbought with their latest thrust higher on Friday. Crude oil breaks through resistance. We've been talking about this $74 level for a while, right? For the past few weeks, we've been saying that there's this range in place, kind of 64 on the downside, 74 on the upside. Well, we did, in fact, break through $74 last week, and now we've pulled back to retest it, and we are slightly below it here this morning in the pre-market, so we'll keep an eye on that. However, what's interesting to me is we are above the 50-day moving average, which is now starting to turn higher. The 200-day moving average is rising, and really we saw a little bit of a pop here in volume for crude oil on the breakout. So that's a little bit of a confirmatory data point. Another confirmatory data point is the RSI for crude, which actually became overbought with the breakout and is in fact shifting to bullish ranges. RSI has not been oversold at any point in the past 12 months for crude oil. So I think that does speak to the strength of the trend. However, one data point to keep an eye on is Chaikin money flow here. While it's less persistently bullish here now, or the intensity of the bearishness rather, it has lessened. It does still have bearish Chaikin money flow. So we'll see how we do testing the breakout level at $74. Continued strength in oil should help that energy sector, in particular the E&P group that we just took a look at. And actually, one of the stocks that is on my radar screen today that I'm pointing out for Chaikin Analytics clients in my note this morning is Exxon Corp, ticker symbol XOM, is a bullish stock from the oil integrated industry group. Closed at 85.34 on Friday, down 28 basis points. So a bit of outperformance. It's a strong trend in a strong industry group. And when we look at the ribbon at the bottom of the screen here, we can see we've just recently shifted over to that bullish rating. However, we were waiting for confirmation, waiting for the dynamic duo to get in gear, waiting for the market to get in agreement with our model. However you like to describe it, it actually started to take place in late September as ExxonMobil began to outperform relative to the SPY. Stock is currently oversold based on our overbought, oversold indicator, and money flow has been persistently positive since mid-July. Slight dip into the bearish territory here. We are keeping an eye on it. However, we're deferring to the persistence of the positive money flow. Stock is above the rising long-term trend line, does have support here in the $80 to $84 area. So I think that ExxonMobil is a compelling name to look at on the long side as well. So just to recap the three names that look interesting to us here today, Danaher, Marathon Petroleum, and ExxonMobil Corporation. So that kind of wraps it up. You can get daily stock IDs for free if you sign up for our Power Feed email. Head over to www.chaikinanalytics.com/today. And as always, we would appreciate it if you like what you're hearing here on a daily basis, if you could help us spread the word, if you could share the show on social media, Facebook, Twitter, LinkedIn, etc. Hope that everybody has a great Monday and the week is off to a good start for you. We'll see you here tomorrow. Have a great day, everyone.